Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Spotify reported earnings before the market opened on Tuesday, and results were really impressive. The market had a really positive reaction. The stock's up 10% as I'm recording, and momentum just continues to build for the company. There's a few angles to look at this at. I'm going to go through all of those today. One is the user growth, which continues to be extremely strong. Then we also saw margin expansion. So I will get to all of that in this video. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And check out this video's sponsor, The Motley Fool, at fool.com/ASYM for their top 10 stocks to buy right now. Now I'm going to take you to the shareholder letter that Spotify put out this morning. This is the summary, the main information that you need to know about Spotify's results. I mentioned the user growth, and this is what has been really impressive in 2023. I think coming out of the pandemic, there was a lot of questions about, was growth going to slow down for Spotify? Was this the kind of product that you were using, listening to more music, maybe more podcasts when you were at home or doing whatever people were doing during the pandemic? And then were subscriptions and revenue, were they going to slow down? And that's actually the opposite of what's happened. We have seen growth accelerate. Monthly active users up 26% year over year and 4% quarter over quarter. Remember, last quarter was actually phenomenal growth as well. So the fact that they're growing on top of that is really impressive. Premium was up 3% quarter over quarter and 16% year over year. These are the people that are actually paying every month for Spotify. And then ad supported up 32% year over year and 5% quarter over quarter. This is where you want to see growth to increase the top of the funnel. And actually the ad supported business, I think potentially could be a much bigger business for Spotify long term than this premium business. It's not the case today. As you can see in this section below, 2.9 billion euros. This is a European company, so they report in euros. 2.9 billion euros in revenue, up 10% year over year and 5% quarter over quarter. You can see with these numbers that they're adding a lot of subscribers in some lower cost regions. Ad-supported revenue up 16% year over year and 11% quarter over quarter. I'll get to that segment in a little bit, but this is where you want to see ultimately long-term growth for Spotify. Again, not keeping up with the monthly active user number, but we will see how that shifts and how margins change over time. Gross profit was up 18% from a year ago. Gross margin, 26.4%. This is really the number that's in the most focus for investors right now, is a gross margin number, and both premium and ad supported. The other positive, swung to positive free cash flow. There are a number of reasons for that. One is some of the layoffs that I did earlier this year. There was expenses related to those, and those hit primarily in the second quarter. So some of those were coming off. That's resulted in lower operating costs and lower one-time costs associated with those changes. Here's just a look at these numbers in a trajectory over the last year. The one thing that really pops out, you can see, is operating income and loss. Had an operating income of $32 million last quarter, and had been losing money every quarter prior to that. So that's related to a lot of those lower operating expenses I mentioned earlier. I'm going to show a couple of charts here that I put together. This is Spotify's premium business. You can see steady growth on both the revenue side, and this is on a quarterly basis, and then margins improving as well. There's that outlier year, but overall, you can see that margins have steadily been increasing, now approaching 30%. That's kind of what we want to target long term. This is a look at the Spotify advertising business. Again, very volatile, but we have seen revenue increase pretty significantly. Usually the seasonal high is the calendar fourth quarter, so that would be the next quarter. So we should see record amount of revenue from an advertising business, and that gross margin may bounce higher as well. So just some really strong results from both premium and advertising, but wanted to put those in a little bit longer term context. This is the numbers as they were reported by Spotify: 29.1% premium gross margin and that 8.3% ad gross margin. This is the other big thing that I was looking at as an investor, is where are expenses going? This is a little bit confusing looking at this chart, but what they're doing with these green columns is last 12-month operating expenses. So the fact that operating expenses are down slightly from a quarter ago tells you that operating expenses quarter over quarter were down extremely sharply, and year over year they were down 13% on a quarterly basis. So just phenomenal progress on cutting costs and cutting operating costs. Management said it during the conference call They've cut the sales and marketing costs really significantly. That's what you see here, and then general and administrative as well. And they have not seen a big impact to things like churn or growth. So what that tells me is that Spotify can actually be a lot more efficient as a business than they have been in the past. And that looks like where they're headed in the future. This is a little bit of a look at the growth. This is the monthly active user numbers. And you can see that a lot of the growth is coming in areas outside of North America, Latin America, and Europe. So rest of the world is where they qualify this. 30%, 31% of monthly active users now, up from 16% in Q3 of 2019. So that's where a lot of the growth is coming from. That's okay, but that's exactly why you see the average revenue per user declining overall. And this is what this looks like on the premium side. Again, those users in the rest of the world are not converting to premium at the same rate as you would expect in North America and Europe. So that's why you don't see revenue growing quite as quickly as user growth, but still need to increase that top of the funnel. So I like the trends from a user perspective. Now, there's a lot going on in this report, but I want to put these numbers into context strategically to think about where Spotify is sitting in its business. This is a company that wants to own your ears. They want to be the go-to place for music, podcasts, now audiobooks. And so to make that business work, you need to, one, reach scale. Two, you need to be able to monetize the users that you have. On the scale side, Spotify has obviously been very successful. Now over 500 million users. If this growth trend continues, we could see them reaching 1 billion users by 2026, 2027. Management has said by 2030, but I think that's even a little bit far out, and that'll happen much sooner than that. As far as monetization goes, the premium side of the business is growing, but only a certain percentage of users are actually going to choose to pay that monthly fee for Spotify. We need to see more growth for Spotify, and what really would make this a successful company is increasing the ad-supported side of the business. So those ad insertions that they put in not only during music, but during podcasts and now also audiobooks, that's where they can really expand margins. They talked a lot about this on the conference call and the tools that they're giving to advertisers to be able to put ads on their platform. One of the things they're using is artificial intelligence. So instead of having someone record an ad for you, you can actually just type out what the ad copy should be and have an AI, even the AI of a celebrity, read that for you. So that could be a phenomenal way to increase the number of ads on the platform and increase both revenue and margins at the same time. We're also seeing Spotify raise prices, which I think is a really strong indication that they do have some pricing power in the market. Management said that they did not see much churn when those price increases have gone into effect. We'll see that start to impact the financials starting next quarter. So the margins look pretty good this quarter, but we should see that improve even further in the fourth quarter, especially if operating costs continue to come down even slightly. You don't necessarily expect a 13% decline every quarter, but if they're able to leverage more of those operating costs with higher revenue, that's going to keep the company moving in the right direction. So a lot of really great trends for Spotify. I like the top of the funnel improving. I like operating costs coming down, and I like them monetizing the business a little bit better. I see all of these trends continuing to get better each year, continuing to get better in the future. I think if you're a long-term investor, this is a company that you can just buy and hold for the next 5 to 10 years, and they'll just keep improving their position in the audio market. But what do you think about the results from Spotify? I'd love to hear your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.